Hey, it's Andrew here. Today I want to talk about this new Calhatha down payment assistance program that is using a silent second that is based on shared equity. So the key things to this program are you can use a silent second that is up to 20% of the purchase price. So for our example, we'll use the price of $500,000. You could borrow as a silent second, meaning you don't make any payments on it up to $100,000. It can all go towards down payment, or it can go towards down payment and to cover your closing costs. So huge benefit there. You could end up putting $90,000 as your down payment and covering $10,000 of closing costs, allowing you to purchase a house in California, potentially with zero out-of-pocket expenses. You do need a 680 credit score. There are income limits. In most counties, they're up as high as $200,000. So most first-time buyers are going to qualify for this program most will qualify based on credit score. As I said, the second doesn't need to be paid back until you sell your house. There is a shared equity piece within that. So that's a 20% loan, meaning that the lender that loaned you that money will also receive 20% of any profit when you refinance or sell your house. So here's the example. You bought your house for $500,000. You borrowed as a silent second, $100,000 or 20%. Your new house in 5, 6, 7 years sells for 600. Out of that 600,000, you're going to pay back 400,000 to your first mortgage. You're going to pay back 100,000 to the silent second loan. You're holding $100,000 in profit. Of that $100,000 of profit, you're going to pay 20% of that, or $20,000, to the lender that loaned you that silent second $100,000. Now remember, you haven't made a single payment towards that loan the whole time you lived on the property. And they haven't asked you to pay them anything except once you've earned a profit. Think about it this way. Let's say instead of the house selling for $100,000 more, let's say it only sold for $50,000 more. So it sells, instead of 600, sells for 550. So now the math is you're going to pay back the 400,000 and pay back the 100,000. You're left with $50,000, but you did borrow 20% of $50,000 is only 10 grand. So that's a lot less money when you think about it. Still the same percentage, but again, you wouldn't have this $50,000 if you hadn't taken that silent second to help you buy the house. So in my opinion, as a financial person, this is a huge opportunity for first-time home buyers. It makes it very easy for you guys to buy a house, get into a higher price house, potentially avoid PMI, start building equity, and possibly buy that house with zero out-of-pocket expenses, using a portion of that silent second loan to pay closing costs, with the remainder going towards your down payment. If you have more questions on this, please just reach out to me. I'm happy to help. Talk to you soon.